Despite an increase in sales volumes, Thungela Resources reported a 6.6 billion rand decline in profit. In its results for the 6 months that ended in June, the coal miner declared a profit of 3 billion rand, a significant decrease from the 9.6 billion rand made at the same time last year. Thungela suffered as a result of Transnet Freight Rail's persistent issues as miners have battled to transport their goods. Revenue fell by 45% and headline earnings per share also fell to 22.46 rand per share. The interim dividend was also slashed by more than 4/5 to 10 rand per share, amounting to a payout of 1.4 billion rand. Thungela has also raised its forecast for export saleable production for the entire year from 11.5 million to 12.5 million tons.
So if you look at the realized export price for coal from Thungela, you're looking at about roughly $105 per ton. The benchmark coal price is down to $129.50, so that's also dollars per ton, and that's a big drop in coal prices. So clearly that's going to affect their revenue. We've seen a 45% decline in revenue just because of the prices. Their volumes are actually up over the period, but obviously with their product price falling, that's not going to be good. You can see the earnings also, big earnings dropped, so about 6.6 billion drop in profits. That's down from around 9.6 billion last year to only 3 billion this year. And the dividend obviously being slashed on the back of that as well. So they have declared a 10 rand per share dividend, but that is down significantly from last period. And that's, as I said, coal prices are the main culprit, but also, of course, the logistics issues that they're having, specifically with their rail infrastructure. Transnet just showing on the Northern Corridor a 13% drop in volume, and that's obviously going to feed into both Exxaro and Thungela. You can't export coal if you can't get it to the ports, and that is one of the major challenges for the business. We're still seeing coal-fired power stations being built in China, and from emerging markets, coal will remain a key strategic asset. So we're not going solar just yet. So largely this is coming off a very high base, and the market, I think, digesting it well. No big moves in the share price.
We are joined now by July Ndlovu, the CEO of Thungela Resources. Mr. Ndlovu, thank you very much for your time this evening. Resources companies are among those that have deeply felt the logistical issues brought on by the challenges at Transnet, and for Thungela, this reporting period was no different. Talk us through the impact of not being able to get your commodities out of the country in time or not to move at all.
I guess when you do a period-on-period comparison, I think it's fair to say that, in fact, what we have seen is more or less the same performance as last year. And this is quite important. When we talk about Transnet's challenges, we were already seeing challenges last year, and those challenges have continued in the first half of this year. What it is stopping us to do is to run our business at its full potential. And clearly we have reported widely, and it's been reported by other players, that we continue to work with Transnet to find solutions to these logistics challenges.
CEO, one of the most notable external factors that the company mentioned today is, of course, the sharp fall in the benchmark seaborne coal price, as Europe buying has slowed down after the mild winter. Where do you see the coal prices going in your outlook?
I can only give you a sense of the short term, and quite often we don't focus the coal price for the simple reason that when you look at the forward curve day by day, it's changing all the time. The reason why the coal price have softened is actually the elevated stocks in Europe, which was actually the theater for driving the prices to what were unprecedented levels. And by the way, this is quite important to provide context, because everyone tends to think that the prices have collapsed and therefore the world has come to an end. On the contrary, if you look at what we have said in our results, the way we think of our business is we plan this business on a long-term price of $90 per ton. And that's what fundamental analysis by organizations like Wood Mackenzie actually shows us. Therefore, this softening price to where it is today, around $120 per ton, is more or less a reversion to mean, as opposed to a price that has collapsed through the bottom.
Let's talk about the company now giving back to its employees through the Sisonke Employee Empowerment Scheme and the Community Partnership Trust. They'll be receiving over 150 million rand based on the group's performance for the first half.
I think this is testament to the fact that we continue to live our purpose, which is to create shared value for all our stakeholders, not just shareholders. And we're quite pleased that we are able to continue to share that value by contributing the 156 million rand to our employees and the communities. This really is to say to those most affected by our activities that we are in this together, that when we talk about the responsible transition out of coal into a lower carbon intensity economy, they equally will benefit from the activities and the value that we create on a go-forward basis.
Mr. Ndlovu, you are also making huge investments, capital investments in the billions of rands when it comes to the shafts, but also you haven't been deterred in your aspirations to actually get into acquisitions. Tell us more about that, as you might have a stockpile of cash right now looking to buy into some new assets.
Look, we haven't held the cash to buy new assets, rather to complete the key investment decisions that we've taken. And we've got three investment commitments that we've made. One, the Ensham acquisition that we announced earlier this year. We also announced last year the Elders project, which we expect to complete for first coal in 2024. In the second quarter of this year, we announced the Zibulo North Shaft. All three of these projects are quite important to improving the quality of our portfolio and making sure that our portfolio is competitive. We believe it is the most prudent thing to allocate some cash to complete these projects, as we believe that stopping them could be far more value destructive. And therefore, our approach is to ensure that we invest through the cycle, for that will immunize our portfolio in the future.
Ndlovu is the CEO at Thungela Resources. Sir, thank you very much for your time.